God, getting interrupted when you're in your creative groove has got to be the most frustrating thing on earth. But we're going to get back to it. Is now a good time to buy Apple, guys. It closed $134.51 this last Friday. Let's take a look at some other stocks, right, too. NVIDIA, $165. Microsoft, $244. Netflix, $290. Amazon, $87. AMD, $65.41. Tesla, $150.23. We're not even going to talk about Tesla. What Elon has going on right now is craziness with Twitter and all that, but long-term investing. I've talked a lot about day trading. I haven't really talked about investing. This channel actually started with me just talking about long-term investing and teaching people how to be just a better, investor, maxing out your 401k, your IRA, which are all things that you should do. What I really want to talk about is just long-term. Should we be buying stocks right now? The economy supposedly is at a pivot point, right? If you listen to 𝐥𝐤𝐬, if you listen to Biden, they're saying that it's getting better, things are improving. But is it at the point where we should be putting more money into the market? Let's talk about it. My name is Forrest. I invest in stuff and I think that you should too. Go ahead, hit that subscribe button, hit the notification bell, and join the force. I do have a Discord channel where I day trade every single day. If you want to check that out, join my Patreon. Links are below this video. When we think about long-term investing, what we're really trying to achieve is compound interest. So compound interest is basically where your initial investment of $100, say it grows 10%. So the next year you would have $110. The next year you would take the $10, you compound it again the next year, right? So the first year you made $10, right? The next year you're gonna make what? That's right, $11, because you're gonna make the $10, 10% on your initial $100, and then you're gonna make the 10% on the $10, which is $1. 10 plus 1 is 11, right? So the second year you make $11. The year after that, you're making some weird amount of money. I can't do the math anymore. But that's compound interest, and compound interest is exceptionally powerful through time, especially when you have a low cost basis. There's a few strategies to achieve a lower average cost basis or a low cost basis in general. One is dollar cost averaging, which is where you just continue to put money into the market regardless of what is happening at any point in time, right? So some of the shares that you buy of, say, Apple, for example, are higher and some of them are lower, like in times right now. So the best strategy for long-term investing, honestly, is if you are already dollar cost averaging. We'll put that as strategy number one, will be dollar cost averaging in the stocks. So if the question is, should we be buying shares of Apple right now? The answer would be, well, you never should have stopped buying. If you were always bullish on Apple, you would have always been buying shares in Apple, especially in a macroeconomic environment where Apple is only doing a little bit less worse off because everybody's a little less worse off, right? Apple, we're not going to do a full Apple company breakdown. I haven't done a stock breakdown video in a while. Maybe I'll do one of those. But I mean, their overall outlook, I think, is still pretty bullish. I mean, they're expanding into different services. They're obviously deeply entrenched with hardware and the iPhone. I use an iPhone. I have 2 MacBooks, an iPad. They're doing pretty well. Titus, what are you doing? You want to be in the video? All right, come in. Relax. Okay? Relax. So number one is dollar cost averaging, in which you just keep buying shares. And that's honestly, I think that is the best. If you're new to my channel and you're kind of scared, micromanaging your money, trying to figure out what to do, should I get an advisor or something like that? Just dollar cost average, guys. And dollar cost averaging, and I'll say it again, just have a really, really simple definition of what it is dollar cost averaging is where you commit an amount of money, either weekly, monthly, whatever it is. There's a normal cadence and you buy that amount of money worth of shares, right? So let's say I'm just going to invest $100 a month, and regardless of what the price is, I'm going to spend that $100, right? And over time, as the price goes lower, I'll get a lower basis, and as the price goes higher, my basis will go up. But in general, this allows me to always get the best prices because I'm not always, trying to get the bottom or get the top. Now, people who do this in general tend to achieve what the market does, right? And so over time, you can expect that 8 to 10% compounding interest. And it's also the simplest way to retire a millionaire, right? So when we talk about investing for retirement, saving for your future, really simple way to do it. That's dollar cost averaging. The second way to do this and think about this is kind of lump sum investing, right? So maybe you cashed out early in the year and you're like, hey, I think we're entering a recession or something like that. I have a lot of cash right now myself, and basically I'm just gonna make a lump sum investment when I feel like we're at some good price point. I do think there's more downside. I could very well be wrong, and it honestly doesn't matter because, again, we're looking at a 5 to 10 year time horizon, right? The price of Apple could be double to triple what it is in 5 to 10 years. And so with that time horizon, it doesn't really matter if I'm off by, $6 or $7, right? It honestly doesn't. And that's the thing that you have to remember, guys. What this achieves, or what this allows you to do, is get a lower basis across all your shares all at once, risk, right? It also allows you, if you sell at the right time, right? Selling a few months ago, you definitely would have missed out on some losses, right? So basically you saved yourself from losing quite a bit of money if you had a lot of shares of Apple or just in the market in general, right? There's a lot of tech, a lot of the big companies took a hit over the last few months, and I've been bleeding off equity over the last few months. And so I know quite a few people who have actually taken risk off out of their portfolio, all cash, and are looking to reposition in the next few months. Is that time right now? You know, as the title of this video says, I don't think so. I think Apple has more downside. I think there is more downside in store for us. You know, Jerome Powell just talked about the fact that they increased the target rate for interest rates and the terminal rate. So we know interest rates are going up and everyone's like, well, when are they going to stop? Well, they had a target and they actually just made that target a bit higher. Now that they've been doing this for a little bit, they're saying that they can actually slow down the pace to reach that rate, right? So they're still increasing interest rates, but instead of doing, 50 basis point hikes or 75 basis point hikes, they actually might go down to 25 basis point hikes, but rates are still going up. They're just going up slower. Give the economy a little bit more time to catch up, etc. So that's what I think. I think there's more downside in store. If you want to know when I reposition into the market for my long-term portfolio, follow me on Discord. Not follow me on Discord. Join my Discord. The link is below. Put all my investment stuff there. I think I need to make a long-term channel though. I don't know if there's one in there. By the time you watch this video, there will be a long-term investing channel there. And yeah, I think it's probably a good idea to do some more long-term investing videos because we're at a really interesting time in the market right now where there's going to be a lot of new long-term opportunity. I know everyone's super bearish and everyone's freaking out because it seems like everything's just going down, 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 down. But guys, you buy when things are low and you sell when they're high, right? So when everyone's freaking out, you have to think, flip the switch in your brain and go, oh, things are cheaper now than they've ever been. This is how you get rich, right? When we talk about how are people able to get those super low cost basis, we have to think about the times that they were investing in, right? If people weren't buying things when they were super cheap, that means everybody else was scared. Everyone else was freaking out. Everyone else was looking at the economy going, oh my God, the world's going to end, even though it hasn't yet. And it isn't, right? It's just a sentiment. You have to be greedy when others are fearful, be fearful when others are greedy. That is it for this video, guys. My name is Forrest. I invest in stuff and it's my goal to help as many other people do the same and change their financial futures. I appreciate you taking the time to watch this video. Please leave a comment down in the description. Pump the like button up. Let's grow this channel together and welcome to the Force. See you in the next one.